My name's Rich Preston from the BBC, and today we're going to be talking about how big corporations work with startups. Joining me on the panel is Elly Hardwick from Deutsche Bank, James Ashall from Diageo. If you're not sure what Diageo is, James will explain, and Saggi, who's the head of marketing at Google. First of all, can we please go through the panel, and can you tell everyone a little bit about what you do at your respective organization, Elly?
Yes, hello everyone. I'm Elly Hardwick, and I have the great pleasure to run the innovation team at Deutsche Bank. Now, innovation team is one of those words that has a multitude of meanings depending on the particular institution, but what we specifically do in my job is to help bring new technology into Deutsche Bank, specifically from startups. So really my job is to make Deutsche Bank the best place for startups to do business.
James.
Hi everybody, James Ashall from Diageo. I work in Diageo Futures, part of the innovation leadership team there. For those that don't know, Diageo are one of the global leaders in the beverage alcohol business with brands like Smirnoff, Johnny Walker, Tanqueray, Guinness. They're probably things that you're more familiar with than Diageo from a consumer brand perspective. Diageo Futures, our job is to drive net new revenue to the business in areas adjacent to our core, trying to look at how we can enhance and enrich how consumers socialize. And most of what we do is driven by partnerships, be that with startups or corporates, to create those new revenue streams.
And Raja.
Hi, Saggi. I've been at Google for 6 years, and I'm still figuring it out. I do a bit of marketing, a bit of business development. I work with startups in my off time. I'm sort of a hybrid. I have sort of a hybrid career, so 10 years in corporate and about 10 years in startups. Still a bit conflicted from that. But
thank you. One thing I'm interested in starting with, Elly, you've been working at this kind of crunch point, this convergence of tech and startups and finance for 15 years now. What's changed in those 15 years? What's big now that you didn't have to think about or didn't think about 15 years ago?
I think I'd really draw it to the subject of this conference in a way, and certainly our panel. And I think if you row back sort of 10, certainly 5 years, the word on everyone's lips was the D word of disruption. And certainly in my industry in financial services, there was a lot of discussion about will the old regulated legacy institutions as they were seen then, will they just be completely disintermediated by a whole new crop of startups? And I think for a while, both, I don't want to call it both sides, but both groups, so both the entrepreneurs and the banks, didn't really know how this was going to play out. And I think there was a lot of caution about how those groups actually engaged with each other. So just so you know, I actually, before I came to Deutsche Bank a little over seven months ago, was a fintech CEO startup myself. So I've lived both sides of the coin. And I think there was a lot of caution on both sides as to kind of who are we doing business here? Are our interests genuinely aligned, or do we need to be very, very careful about the way we interact with each other? I'm delighted to say that I really think that has moved on, and I think both startups who are looking to get involved in the sort of the B2B side of financial services and the financial institutions themselves have both realized actually that there's a lot more to be gained out of collaboration, and that there is a need in the market for the specific capabilities and attributes that both groups bring to the table.
So Deutsche Bank has an innovation department. Is that common in big banks?
I think it is common. I think what it means is not necessarily so much in common. If you look at the sort of the innovation marketplace, certainly in financial services, you probably see 5, I'd say, models of doing innovation that have emerged. So on the investing side, you'll have corporate venture capital, corporate principal investments for the later stage companies, and then there's sort of accelerators and incubators, which have really merged into one in terms of sort of terminology, but it's sort of the either bringing in companies from outside, from externally to grow more quickly, or incubating ideas that are internally generated. And then there's a model that we've actually chosen to pursue, which is a labs model specifically focused on technology transfer. And there's a very, very specific and I think good reason for that, is that innovation, to use that phrase, can be seen as sort of something very other from a corporate. You set up a new office, remote from the mothership. You hire different people who very deliberately haven't come from that background because you want to do things differently. Well, that's fine, but you end up very distant from your mothership. Fundamentally, innovation doesn't happen in a vacuum. You are innovating relative to something, and your innovation efforts need to be connected to that. So the reason Deutsche Bank specifically has chosen labs is it's a very quick flash to bang, if you like. So the time we can get a new startup onboarded into Deutsche Bank compared to us, for example, incubating something or investing for a corporate VC is dramatically faster. Also, it's got a much higher hit rate. To be perfectly frank, we're interested in getting business done, and the likelihood of us having a positive outcome of a proof of concept or something we do with a startup is much higher than even the very most successful VCs who maybe have a sort of 1 in 10, 1 in 20 hit rate.
James, there are companies out in that hall, some of whom will be a few weeks old, a few months old. The brands that Diageo works with have been around for decades, decades and decades and decades. Surely innovation is the antithesis to what Diageo is about.
Yeah, I mean, Diageo's 20 years old as a company, but you're right. I mean, our brands are hundreds of years old. So Guinness is over 250 years old, Walker around the same space. Interesting, though, if you go back even further, I mean, alcohol's a 9,000-year-old industry. So people have been drinking drinks from cups for 9,000 years. And fundamentally, I mean, when these guys finish today, they're probably going to go and have a drink from a vessel that they've bought, that a barman's given to them. So some of the fundamentals of that haven't shifted. Our job is to be the custodians of these iconic brands and to hand them on to the next generation of business leaders and marketeers in a better state than we get them. And to do that, we need to recognize how the way that these brands connect to consumers is changing. And so where innovation is, I think, prevalent in our industry and where we need to focus on is the way consumers discover, shop, and experience those brands versus the products themselves. So the products, we have a big innovation team at Diageo that delivers great innovation at scale through the products. We've built business brands like Ciroc and Bullet. But I think the area that we focus on as Diageo Futures is actually in the way people go and find these brands and where they find them, the way the experiences exist around those brands, and the way people shop them. And they're the areas that are being disrupted in our industry. And innovation is therefore truly core to how we build these brands and how we set these brands up for the future as they move forward.
James and I were just chatting earlier about how difficult it is for a startup to engage with a large brand. And, you know, large organizations, they range from, 20,000 to over 100,000 employees. And, you know, sadly, we have a lot of time, right, to meet with people like yourselves who are way more exciting than the people that we meet in the office. So quite often, it's a case of, you know, providing the pathways. And what Elly was talking about earlier, and James as well, is that having a defined pathway for startups to engage, whether you call it the innovation department or the futures team, is really helpful for both the large organization, much as they'd like to be at these events all the time, and for the startups to get from initial concept stage to a partnership agreement as quickly as possible, if that's the right thing for them.
So how does Google do that?
Not as well, sadly. So I think you know, Google is still functioning like a startup in a really large organization. So we, you know, one of the things, I interview a lot of candidates, and one of the things I look out for is the ability to survive in a chaotic environment. So, you know, when we get approaches from startups, they could come from anywhere. They could come from sort of the official hub, which is Campus London, which is just around the road. But they're almost as likely to come from, you know, an approach to a head of business development, someone who works in marketing, or someone who works in the venture team. And I think, you know, I would probably say that in some of the cases we deal with these approaches quite efficiently, but in others it can take time to navigate your way through. So having that, you know, dedicated function can be quite helpful.
It's interesting what you say that Google is a large organization that functions like a startup, because that's probably not true for Deutsche Bank. You know, this big corporate entity, lots of suits, office in the city, and yet you're talking about working with startups that may be a company of 10 people, jeans and t-shirts, working out of their bedroom. How do those two marry up?
Yeah, it's a very interesting question. I mean, having I mean, grown a startup from one person, i.e. me, you realize from both sides, the reality is a startup has to be at a certain stage of development to be capable of dealing with a regulated financial institution. And in some ways you might say, oh, how off-putting, are you missing the sort of the best early stage ideas? But there's a reality of dealing with a large institution that startups have to be prepared for and they have to be ready to deal with. So even if you are that 5-person startup working out of a bedroom, that might be fine, but the face you need to present to your customer needs to be a face that they recognize. I mean, that's basic sort of customer research. So I think there's a positioning needed to make your customer comfortable with you. The reality is, we're not entirely full of suits in our offices, but there's a reason banks behave the way they behave, and it's not just for fun. You know, sometimes there's a feeling amongst startups that if only banks sort of got it a bit more and were a bit more nimble, then they'd adopt their products instantly and everyone would be happy. Well, there's a reason, for example, we have tough onboarding processes and we have tough compliance checks, because at the end of the day, we're dealing with other people's money and customer data, and we have to be really, really sure that we're not sort of creating a soft underbelly of risk by giving more favorable terms or easier terms to a small company just because they're new. So we have to expect startups to meet the same requirements as we would any other vendor. But then that's where a function like mine can come in and help, because I think where banks can do a lot better, and what we're certainly working on doing, is to be clear about what the requirements are and to be clear about them upfront, so that startups can make an informed choice. Do I want to take this on or not? Maybe if I'm a fintech startup, maybe I want to start out dealing with an unregulated financial sector like hedge funds, or someone whose requirements are not going to be so high. You need to be able to make that, frankly, economic decision up front.
Is that quite tough for people to kind of shed their jeans and t-shirt, startup kind of new idea and mold into that corporate world?
I don't think it should be. And really, from me, having been in a startup, it's tough love. In that I want startups to succeed, and Deutsche Bank wants to be able to adopt these new technologies. But if you, at the end of the day, a startup selects its customers, right? You choose to be in that market or not. And it doesn't really fly to say, well, I'm sort of 5 guys or 5 girls in a bedroom, why don't these big customers get it? Well, at the end of the day, it's up to any company to understand their customers and make sure the proposition they are bringing fits their customer needs. So I'm sort of relatively unsympathetic, I have to say.
So just having a crack at that question, when I was in a startup, we were wearing t-shirts and jeans, and we were trying desperately to interface with large organizations. And what we found was that there were people who could do it better than we could, right? And what you could try, if you have sort of a small amount of funding for a retainer type agreement, you can actually find these introduction agencies who focus on specific sectors and get them to pitch your products and services. But even before that process happens, what you want to ask yourself is, am I ready, right? Am I ready for a 6 to 12-month commitment from initial meetings down to final contractuals? Am I ready to invest in a service level agreement and a services team to support the needs of these large organizations? Quite often you're not, right? So working with a big company might look great for your investors, but if you haven't got your first few customers under your belt, and that's a generalization, there are startups that are infrastructure startups that only function in large organizations, but for the vast majority, you probably want to pick up a few revenue-generating customers, have your end-to-end processes working right, your product pass version 1.0, and then think about raising a round of funding to go after the big corporates, right? So is it right? And then if it's right, think about the introduction channels you might use. It's clearly not the best use of your time as CEO to be knocking on doors, right? Once you have a few customers and a product. Far more efficient to use an introduction agency. And the big 3 or 4 roles that they should go after are product managers, product marketing, the innovations team, and maybe in-house VCs, right?
I think there's something really powerful in that, Raja, in getting to the person in the corporate who can make a decision that can help your business. And I think you can spend a lot of time going through the layers of the system to find those people. Yeah. And I think teams like ours who make that easier for the startups hopefully become a point person in. And I think the second thing, building on it, and something we've found in our experience is where we're really clear on what we're looking for as a corporate and the areas that we want to move our business into, it's much more helpful in terms of filtering down the conversations we want to have, and also making sure that we don't become a time sink for the startups out there where, you know, every minute spent on something other than driving your business is an opportunity cost. So I think there's an onus on us as well to make that interface as simple as possible, and there's an onus on the people in our companies to only take those meetings if there's something that can be actioned from.
Yeah. How do people tend to find you? Do you go on fishing trips, come to things like this, or is it people cold calling you because they've seen you on LinkedIn? What's your different experience there?
We've got a few different models. So we've got a model out there which is called Distill Ventures, through which we invest in startup spirits companies. It's actually run and sits entirely outside of Diageo, so it has its own system and process around it. In that world, we go out and actively search for the companies that we believe could be the spirits brands of the future, but it's closer to the core of our business. So if you said, are those brands, could they be the Johnny Walker of the future? We're going out to find them because we believe we have the system and the infrastructure to scale with them alongside their agility. I think as we move more into the space of discover, shopping, and experience as the brands, we want to tell people what we're looking for, but actually, I think it was something Elly was saying earlier, they need to be able to come in and find the people or find the organizations. They need to be mature enough to find the opportunities themselves, and I suppose that's part of checking that the partners that we're working with are going to be able to survive the onboarding process that Raja was talking about.
Yeah, so back in my startup days, we'd go to a board meeting, and the words that you dread to hear from your chairman or chairperson were, I played golf with so-and-so, and you think, oh no, where is this going? And sure enough, there's a meeting at the end of it, which in some cases you had to fly to California for. So, be very careful. Firstly, do you have the resources to support this? Secondly, what are the channels you might want to use? The innovations team, for example. And thirdly, know when to call it quits, right? This is a sales process. Engaging with a large organization is yet another sales process. And sales cycles have milestones and deadlines. So if after 3, 6, 9 months you haven't cracked it, it's probably time to move on. In Google, we get inbounds, as I said, from all directions. And the challenging thing is to try and route them through generally towards product marketing or product management teams that can help them. But because we're such a large organization, oftentimes I don't know who the right person to help that inbound request is. So it's a challenge, right?
I think there's a lot startups can do to help themselves, actually. Two things. Firstly, I get a lot of unsolicited mail, and I say there's two different types. The first is where some salesperson or biz dev person has literally just found you and sends you the generic spam. And even in this day and age, you'd be shocked to hear that's probably about 95% of the mail I get. And inevitably, my job is to be the face of the organization to startup, so I'd love to engage with all of it. I can't. My team can't. The 5%, though, is when somebody's taken the effort to say, okay, right, let me have a really deep think about what my product does, what you would use it for, where it might fit, how that would work. And as you say, sort of take some of the legwork, because Deutsche Bank has 100,000 employees. I do not know every bit of what Deutsche Bank does. If it's your company and you know what your company does and the value you can deliver, and you can lay that out in a very clear way that I can go, right, okay, I get that. I know who to send it to. Your chance of having that being actioned is dramatically higher. Yeah. But I would say that in many ways it's the same as VCs, in that the best introductions come from other entrepreneurs. If you know another entrepreneur who's successfully sold in, then that has exponentially more weight. Or indeed, introductions via VCs themselves are also very powerful, because to be frank, we just know that a certain degree of due diligence has been done and that your startup has made it through that.
How much, for want of a better word, babysitting do you have to do of a new startup that comes to you? Do they need a lot of nurturing often, or are you looking for people who are ready to go?
We need people who are, I don't say we don't nurture, because the advice we can give is, for example, sometimes around business models or operational models that will be more or less easy for us to work with, because there's a reality of a large regulated financial institution. Some things are easier than others, and we can help startups maybe tweak things. Obviously, we're not going to fundamentally rework your business model at you, but we can provide that kind of guidance. But at the end of the day, if we sort of bring a startup into Deutsche Bank through the innovation labs, I want two things. Firstly, I want it to stick. Secondly, I want it to be able to scale. So if I look at a company and I see you may have a brilliant idea, but there's no bench depth, then I will really have to question your company's ability to scale. So I want to see that that capacity is there, or at least you've thought about putting that in place. And it goes back to the sort of the comment about service level agreements. There are some things which are negotiable when you deal with a large institution, some things that just aren't. And knowing that you are set up to deliver the minimum requirements is really, really important.
Yeah, I think being core to anybody's job function is just a must. So if you can identify the product manager or the team in the organization with the help of the innovation team, the innovation department, that sees your idea or your product as a must-have, that's a great starting point. But these things take time, right? And you could be in a pretty crowded space where there have been a number of inbounds in exactly the same sector or category. So treat it like a sales process, right? Use your BANT framework. Are you speaking to the decision maker? Do they have negotiating authority? Is there a timeline, right? All of those things count in trying to get that deal in place and get revenue flowing.
Do you think that the large organizations can be a bit smug, a bit arrogant? I mean, if someone were to come to you, Raja, and say, hey, I've got a great idea for how we can revolutionize search, would Google turn around and say, I think we've got that one sorted? Or are you kind of willing to listen to all ideas?
So the one thing I promised myself when I left startups was I would try and help as many startups as I could when I was in the corporate sphere. It depends on how busy sort of the annual cycle is, but by and large, I can try and see sort of 25% of the inbounds that come to me and want to have a conversation about something completely blue sky. Right? That's kind of the time that I can set aside. One of the things we were talking about earlier is sort of the enjoyment that we get from connecting with startups. So, despite all of the gates that I've just described, it's a lot of fun to sit down and have coffee with someone who's got a great idea, even if that doesn't go anywhere. What you, on the other side of the sort of equation, don't want to do is have too many of these coffees, because you effectively are wasting your time, right? So I think we're pretty open, but we want to make sure that everybody gets to the right outcome.
So what kinds of ideas do get Google interested?
Scale was mentioned, so that's an absolute must. Can it get to 1 billion users? So a lot of these things are in the consumer space. We don't generally look at the monetization opportunity. So one of the refreshing things about the culture is we look at does it really solve a user problem, right? So focus on the user, and all else follows. Can it get to 1 billion, right, or 100 million? Right, those sort of numbers. I think the team and the values of the team come across quite sort of subtly, but they're always there in the background, right? You want to work with people who you can trust, right? Who can deliver, and if there's any way of bringing that into the discussion that you've launched, X number of customers, you have robust infrastructure, et cetera, that's sort of part of the table stakes process.
And James, what about Diageo? What kind of emails that come in your inbox would be the kind that would get followed up on?
I think it's a really different industry, very similar response. For us, it's something that can enhance the consumer's interaction with our brands. So anything that can that could create a business, could create net new revenue in a way that is somewhere between where our brand is produced through to where the consumer actually enjoys it. That's the stuff that is fascinating for us, and they're the ones that we would look to explore further. And in many cases, you don't know at that stage if those are businesses that are set for success or if they're interesting ideas that maybe won't go anywhere. So that's why all of those conversations are potentially interesting ones, and and our skill is to weed out which ones, I'm not sure how good we are at it, but weed out which ones are the most successful, because if ultimately we want to be working with the ones that can have a longer term impact on our brands, going back to my point that we're custodians. So.
And are you looking for short-term or long-term ideas? I mean, are Deutsche Bank looking for something they can run for 6 months or 6 decades, for example?
I'm not sure if it would be 6 decades, but very much towards the latter side of that. We made comments about the length of time it takes to sell into a large, complicated institution. There's some of that can be improved, but at the end of the day, it's a reality. It takes, I'd say, a minimum of 4 months to sell into a large financial institution, and it can take years. So the flip side of that is there's not really any point doing that for a very short engagement. Having said that, and thinking about sort of some of the areas we've facilitated the adoption of new technologies, in an organization sort of as broad as us, you'd be very surprised. And I think the key thing is that the friction and the cost has to be proportionate. And I think sometimes there's a feeling amongst startups that you have to sort of promise the earth in order to get somebody's attention within a large organization. Actually, the second we hear people promising the earth, we usually are very, very skeptical indeed. I'd much rather hear somebody tell me, I've identified this really specific and quite small pain point, but I can solve it in a very neat and frictionless way. That's wonderful, I'll take that because I can probably plug it straight in, rather than somebody who promises to be able to boil the ocean and then actually falls over their own feet when it comes to proving it in a real world environment.
Roger.
Yeah, I think we're quite open because we recognize that we cannot provide all of the services and products to our end users across marketing, sales, and the product team. So there's this phrase, innovating at the margins, right? Which is what you were referring to on something really simple to do, or maybe it's not that simple but can be done in 3 months. That's innovating at the margins. These things have their value, right? So there was one project that just came to mind where we just needed an event booking capability, right? It's very simple. And there was a startup that provided it. It fit into one of our partner portals, which saw tens of thousands of visitors every day. It was a nice solution. It worked, right? I mean, on the other end of the spectrum, you've got, some of the recent acquisitions that we made, companies like DeepMind, really high-tech stuff. And I think you generally have to be quite open-minded and see, as Elly was saying, does it fit the particular problem that I'm trying to solve? Can I get a product out in a certain duration of time or meet a business need, and then engage with it? And it doesn't have to be a time machine in order to achieve that. Right?
You said earlier on, working with a big organization isn't for everyone. One of the benefits of being a startup is that you're nimble, you're agile, you're small, you can be flexible. Is it possible to retain some of that whilst still working with Deutsche Bank, Diageo, Google? What do you reckon, James?
Yeah, I think it absolutely is. I mean, I mentioned earlier our model of Distill Ventures, where what we do through that is by situating it outside of our core business. We take what we think can add real value to those startups in the early stages of where they're building and nurturing their businesses. And when they hit a scale where it's going to matter to the general manager in GB or the general manager in Nigeria, then that's the point where we start to make the interface into some of our bigger business systems. And I think that's one way of designing that model. I think there's multiple ways to do it, but we're absolutely looking for the startups to keep that agile, nimble, innovative way of approaching solving their problems. But that said, in a regulated industry, as Elly is, we need to make sure that we are very clear what are the ground rules and the tram lines that has to operate within. So we need to face into where those interface challenges are, because there are some, and we have a business that is set for scale, not optimized for startups. And that is the core of our business and how it operates. But if we do face into them, and if we are very clear with the startups on where we believe we have value that we can add versus where we want to keep some of the business that is set for scale away from them in the early stages, I think there's opportunities to create winning combinations.
Raj and Elly, you're both nodding along to what James is saying, but you come from very different institutions. So let's start with you, Raj. Is it possible for someone to work with Google within their framework and keep their agility and their kind of nimble nature?
Yeah, I think we try really hard as an organization to be really flat, right? So minimize the number of layers from the CEO downwards, to make decisions quickly, and to have very clear priorities, right? I think those three things are important for any organization, small or large. Clear priorities, a very small sort of headroom, or a very unhierarchical organization, and freedom of execution. And generally, so I'm not at the end of the organization, the product management organization, where we would bring in a startup, have them work with us, and potentially there could be an acquisition down the road. But in previous companies that I've worked in, what I found really helps is effectively to break off the startup space from the rest of the organization. So, give open APIs, desk space, maybe a beer fridge, and access to technical resources, but don't make them go through your sort of budgeting cycles and your procurement cycles, etc. Within reason, right? Following sort of corporate guidelines. So, have maybe an office in Shoreditch, right, where this team can work from, rather than have them sit in your corporate office and have to dress like us, right?
Elly, do people get a beer fridge at Deutsche Bank?
Not that I know of, actually.
Need to find that beer fridge.
There's maybe something we could collaborate on.
We could, that's instant value add. I love it.
Yeah.
I'll go back to my sort of tough love point in a way. I sometimes think, and again, maybe it's coming from a regulated institution, that there's a danger in innovation functions going too much in the direction of the startups. Because if I were to sort of have my lab with, I'm sort of characterizing, but with the exposed brick and the pizza table and the foosball and all of this, that's lovely, but I'm not giving the startups a real indication of what it's like to do business with Deutsche Bank, nor am I giving them the best chance of succeeding in the long run. It's like sort of the argument that people in schools, the headmaster shouldn't wear a suit because that will freak the children out. Well, at the end of the day, what the children really need to learn is how to deal with the people in suits. And if I'm doing anything from the startups, it's sort of honing them to succeed in the reality of dealing with heads of desks, heads of technology within an investment bank. And I'm not sure how much I really help them by, I'm doing myself out of free beer is a really bad strategy, but by having an environment that doesn't look anything like that, if you see what I mean.
But there's something in the... Sorry, Roger.
Fair point, yeah. Sorry.
Yeah, I was just going to say, I think there's something really important there in the values of the company that the startup's looking to work with, and making sure that you have those values compatible early on, because if you get those values right and you align your incentives and you really understand the nature of the industry and the decision makers and the structure you're going into, I think you've just got a much better chance of success than if, to your point, Elly, than if we set up something that doesn't look and feel like Diageo. I mean, that's not going to pave the way for a great interface down the line.
One of the things James and I were talking about is, how can we reduce the friction, right? So that it doesn't necessarily have to involve beer fridge, but we'll take that. So how do we reduce the friction and get organizations such as yourselves in through the door, and not dependent on LinkedIn inbound or a chance encounter, and playing on our infrastructure or in our processes, and then decide how to segment these startups based on whether they meet the bar or the threshold for a deeper engagement. So it's slightly easier in the tech space where we have the infrastructure, we open up the APIs. You don't need a contract, you just need the T's and C's and accept that. How do you do that in larger organizations? At some point you need to introduce them to the suits, but how do you make sure that until that point is reached, you can cast a relatively wide net, right?
Later on this afternoon, as Daniel mentioned, Matt Hancock, the Minister of State for Digital, will be speaking here at 3 o'clock. So in our closing few minutes, I'm interested, is the UK government doing enough to encourage startups, to encourage tech innovation, and to kind of facilitate collaboration between these guys and you guys?
I think from our perspective, looking at London, it's the granddaddy of financial services. So there will always be, I think, that interconnect between the institutional side of things and the startups, and you can see the strength of just the ecosystem, the people who are out there to work with you, and I think the collaboration, but the involvement of the regulators in terms of regulatory sandboxes and regulatory bridges to other locations has been a really positive thing. So long may it continue.
James?
Yeah, I mean, I don't have a clear view on that, to be honest. So I'm not going to venture something. I think it feels like from what we're finding from a Diageo perspective we're finding that there's a lot of very good, credible startups coming into the drink space from the UK. So it feels like it's an area that's growing. It feels like it's moving in a good direction. I don't have a clear answer to your question.
And Raja, if you had time with Matt later on, what would you say to him? We really need the UK government to do.
So firstly, I thank him because the UK, and especially London, is one of the best places in the world right now to start a business, from time of inception to launch. It's got all the ingredients, right? The one thing I'd ask is more investment in education, especially the kind of skills that all of you have, but are not so easy to come by, right? So how do we make sure that we have, continue the work that we've done in coding? How do we take that up a notch, and what role do corporates play in that? I think that's where we could really make magic.
Great, thank you very much. Ladies and gentlemen, please join me in thanking the panel, Raji Saga, James Ashall, and Elly Hardwick.